Hi, welcome to the fifth video of this series, which is Trade Life Cycle. In this video, we will cover how a trade life cycle can be divided into three different departments, which is front office, middle office, and back office on basis of their functions. Then giving a brief description about the role and responsibilities of all these departments: front office, middle office, and back office. Trade life cycle can be divided into three different departments depending on their functions, where front office is responsible for order capture, order enrichment, and order execution. So whenever a client sends an order via fixed message or email or phone to our sales trader is responsible for capturing that order information into the system. Then system may auto enrich that order as per the standard rules, or the trader can also manually enrich that order. After that, trader will send that order over to the dealing desk or the execution desk, who will be responsible for execution of that order on exchange or within the organization system. Middle office is responsible for trade validation, trade booking, trade enrichment, and confirmation generation. So once an order is executed at front office level, it flows into middle office, and then middle office is responsible for actioning that trade, validating that trade, booking as per client's expectations, and sending the confirmations to the counterparties. Once middle office has generated confirmation of the trade flows into the back office, where back office team will be responsible for clearing and settlement of that trade, doing the accounting and finance for that, and cash and stock reconciliation, which will happen after settlement. We will cover all of these functions separately in next slide in more details. Please continue. Now coming to role of front office. Front office is responsible for order execution on behalf of client, or a trader can also trade on the bank's proprietary account. When the trader is trading or trying to execute orders on behalf of a client, the bank acts as a broker and charges commission for it, while on firm's proprietary account, it is called principal trading. Front office is also responsible for investment decisions. They have their own team of research analysts who look into securities, research various companies, and then the traders can advise their clients on which securities to buy or what could be their investment strategy. Apart from that, front office is responsible for order execution. They can try to execute the order on exchange or at other venues or over the counter with some other broker. To know more details on order execution or order management, you can see the video number 4, which is order management system. Front office desks are usually named as per the trading strategies or trading types they use. Like for swap desks, they do deal in swap trading, where they can swap some chunk of execution with a different broker. Similarly, derivative desk tries to trade in derivatives, where the underlying securities can be equities or can be other assets. Similarly, security lending desk usually trades in stock loan or lending and borrowing of extra shares and bonds which lie with the bank. In front office, sales desk is responsible to connect with clients, offer them investment opportunities or give them insight on their investments, while the dealing desk will look into the execution, will look into clients' orders and try to get it executed at the best price and as maximum as possible. While capturing the order, front office will also be responsible for order enrichment so that it reflects correct client information, correct commission that needs to be charged to the client. This can be automated using some business rules, or if that is not happening, then front office may do it manually on the system. Now coming to middle office. Once orders are executed at front office level, the order information or executed trades information comes into middle office system, where trades are booked with client and counterparty details and other economic details of the trade. Middle office is responsible for validity and verification of trade details. Few of the parameters can be commission, who is the client, what is the execution price, what was the execution price proposed to client, and other economic parameters of client and counterparty. Middle office is responsible for trade allocations as per client request, which may need middle office to bulk multiple trades or split the original executed order. For example, there can be a situation where a mutual fund has asked a broker to execute 1 million shares in market to buy 1 million shares of a particular security. Once the order is executed, then that mutual fund decides, if they have multiple funds, how much percentage each fund will get out of those 1 million shares. Now, middle office will be responsible to split the original order, as per the allocations provided by client, which is called trade allocation. Once the trade allocation is completed as per the client request, then the trade confirmations are sent to counterparties, which will contain the economic parameters of that trade, the trade like trade date, settlement date, name of the security, security identifier, the price, quantity, and also the standard settlement instructions of that counterparty and the company's own standard settlement instructions, which will be populated from the back office systems. Once trade booking is complete at middle office level and there are no exceptions in the trades, then these trades will flow from middle office system into back office systems. Once a trade is booked in middle office system with no exception, it flows into the back office system, where back office team will deal with settlement of securities, transfer of cash at depository level, and other related activities. Main tasks of a back office team includes pre-settlement matching, settlements, and post-settlement reconciliation. Where pre-settlement matching means the back office team need to check the trade whether it is matched at local custodian level with the counterparty or not. If there is any mismatch, they may need to contact the counterparty to match the details, or may need to contact their own traders to rectify the trade details. Once a trade is matched in pre-settlement period, on settlement date, back office team will be responsible to ensure that settlement happens. For settlement, the buyer of the securities need to have sufficient cash in their account, and the seller of securities needs to have sufficient shares in their account. On settlement date, back office team can perform multiple functions to allow a trade to settle, which can be splitting of trades, bulking of trades, to match their counterparty, or to remove some exceptions. Due to this, there can arise a situation where there can be multiple times a security can be delivered, or such situations. To find out if there is any discrepancy in settlement, back office team is responsible for post-settlement reconciliation. Back office team will do cash and stock reconciliation a day after settlement has happened. Back office team actually works only on the exceptions in a particular trade. So let's say if a trade is unmatched with the local custodian status saying that counterparty is alleging some different quantity, then back office team needs to speak with counterparty's back office team to resolve this issue of quantity mismatch. Similarly, if there is any other counterparty alleging in market instead of where our back office team is alleging, they can speak with the counterparty to get the actual information or correct information, or they can also speak with the trader to get the rectified information in the market. Apart from exception handling for pre-settlement matching, settlement and post-settlement reconciliation, back office team is also responsible for some additional tasks like SSI's update, where SSIs are standard settlement instructions which contain the beneficiary BIC, the local custodian BIC, and beneficiary account number. Back office team is also responsible for position management, where they look into the position of shares which are there pending deliveries, so that if there is any shortage of securities, they can raise it to their traders for cover. Back office systems are capable of swift generation, but there can be few scenarios where the system may not be able to generate the swifts, or there may need to be a manual intervention from back office team to create swifts for local custodians. Nowadays, brokers have multiple accounts in multiple depositories, where a depository can be a local depository in the local exchange, or it can be an international depository like Euroclear. So back office team will be responsible for movement of shares between international depository account to a local account or vice versa depending on when and where the need arises. There are other tasks as well which a back office team can be responsible of, like accounting or validation and enrichment of trades flowing into back office, creating a system for that, and other few similar tasks. We have come to the end of this video. So if you like our video, don't forget to share. You can also subscribe our YouTube channel, which is Capital Markets Easy, or you can drop us your queries on our email, that is capitalmarketseasy@gmail.com. No spaces please. Hope you like these videos. Keep on sending back your queries. Thank you.